Welcome to Tips and Tricks Pro. Are you ready to dive into the world of investing but don't know where to start? In today's video, I'll show you the easiest way to invest in the Australian stock market, even if you're a complete beginner. It's simpler than you think, no need to be a millionaire or wear a suit to get started. If you've ever wondered how the Australian stock market works or how you can make money from stocks, keep watching. Let's get straight into it. First off, what exactly is the stock market? The stock market is where people buy and sell shares of companies. A share represents part ownership in a company. Think of a pizza, each slice is a share. When you buy a slice, you own part of the pizza or company. For example, take Woolworths, a well-known company on the Australian Securities Exchange, ASX. Woolworths has about 1.22 billion shares outstanding. If you buy even one share, you own a piece of the company. But don't get too excited, being a shareholder doesn't mean you can walk into Woolies and grab free snacks. What it does mean is, if Woolworths performs well, the value of your shares may rise, and you could benefit from that increase. However, if Woolworths isn't doing well, the value might drop. But, as a shareholder, you don't have to manage anything. You're simply a part owner, and the company's management works to keep the business profitable. To invest in shares, the company must be publicly listed. In Australia, the ASX is the platform where you can find all publicly listed companies. Let's take a quick look at the top 50 companies on the ASX by market cap. This is a great way to start exploring options. Now, let's talk about how you can make money from stocks. There are two main ways: capital gains and dividends. The first way is through capital gains. For example, if you buy 10 shares of a company at $90 each and they rise to $100 a year later, you can sell them for a profit of $100. The share price increases when more people want to buy than sell, which can happen when a company reports strong earnings or the economy is doing well. The second way is through dividends. Many companies pay a portion of their profits to shareholders, known as dividends. You may receive dividends for owning shares in a company like the Vanguard Australian Shares Index ETF VAS, which tracks the top 300 Australian companies. These dividends can be paid quarterly, and while not all stocks pay dividends, it's a good source of passive income for many investors. So, why should you invest? One word: inflation. Inflation increases the cost of goods and services over time. This means that what you can buy today will cost more in the future. Let's take a Big Mac, for example. 30 years ago it cost about $2, and now it costs nearly $8. If your money is just sitting in a savings account, it won't grow enough to outpace inflation. Investing, on the other hand, offers the potential to earn returns that keep up with, or even exceed, inflation. You've probably heard the saying, cash is safe in the short term but risky in the long term. The same goes for investing. The stock market can be unpredictable in the short term, but historically, markets have grown over the long term. The ASX has averaged a 9.2% annual return over the last 30 years, and the US stock market has averaged around 10%. Before you start investing, there are a few key steps to take. First, pay off high-interest debts. If you're carrying credit card debt with interest rates over 10%, focus on paying that down first. It's a guaranteed return that you can't get in the stock market. Second, build an emergency fund. Aim for 3 to 6 months of living expenses in a savings account. This will protect you in case of unexpected expenses or emergencies, like losing your job or facing a medical bill. Now let's talk about individual stocks vs ETFs. If you're just starting out, ETFs, exchange-traded funds, are a fantastic option. An ETF is a collection of stocks, so when you buy one share of an ETF, you're investing in many companies at once. This helps spread out your risk. For instance, VAS tracks the ASX 300, giving you exposure to 300 of the largest companies in Australia. On the other hand, investing in individual stocks requires more research and comes with higher risk. Beginners may want to start with ETFs to build up confidence and experience. So, what should you invest in? While I can't give you specific advice, most beginners start with ETFs that track indexes like the ASX 300 or S&P 500. Diversifying across different markets can also be a great strategy. When it comes to investing strategies, dollar cost averaging is one of the best for beginners. With this strategy, you invest a fixed amount at regular intervals, regardless of the market price. Over time, this can lower your average cost per share. Another strategy is lump sum investing, where you invest all your money at once. This requires more confidence and understanding of market risks, but it can offer higher returns in the long run. Lastly, when deciding between Australian and US stocks, it's important to note that the US stock market is much larger. But that doesn't mean you have to invest in the US. Many investors have done well just focusing on the Australian market. Personally, I invest in both to diversify my portfolio. To invest in the Australian stock market, you'll need an online broker. There are several options available, but I personally use Moomoo, which offers low fees, direct ownership of shares, and the ability to invest in US stocks. You can even earn rewards and get free stocks when signing up through my link in the description. How do you buy your first stock? It's easy. Let me show you how using the Moomoo app. You just need to search for the stock you want, enter the number of shares you wish to buy, and confirm your order. That's it, you've just bought your first stock. Finally, let's talk about taxes. In Australia, you need to pay capital gains tax on the profit you make when selling shares. If you sell within a year, it's taxed at your normal rate, but if you hold for over a year, you get a 50% discount. You'll also pay tax on any dividends you receive. Before we wrap up, if you found this video useful, don't forget to like and subscribe to Tips and Tricks Pro. Also, join my free newsletter for more tips on personal finance and investing. Check out my video on how to buy your first stock or ETF linked below, and thanks for watching. I'll see you in the next one.